Hi. So good afternoon. So there've been a lot of news about this new tax laws. So that's the Nigerian Tax Act that has been signed by the president. So I'm like doing a bit of research on it. So I said to do like a little video on it. So just to highlight the important points. So the first is corporate tax relief for small businesses. So small companies turnover less than or equal to 100 million and fixed assets less than or equal to 250 million are exempted from company income tax, capital gain tax, and 4% levy, development levies. So if you are a company, not a business name, a company, so maybe a public limited liability company or a private limited liability company, but a company registered as, when you register a CAC, if you registered as a company, you are exempted from paying tax if your total turnover is less than 100 million naira, or if the total asset, fixed asset of your company is less than or equal to 250 million naira. I guess that's why the tax officer, or the person that came up with the tax law, that's Taiwo Yedili, was always saying this would help small businesses. So most Nigerian businesses are in the informal sectors, and you can call them small businesses. So they are assuming that really it is fair, because if you are more than 100 million in turnover, or you are more, you own asset of greater than 250 million, you can't at that point be calling yourself small business anymore. So I guess that is why they are saying if really your money is less than 100 million and that's your turnover, the entire money you get from businesses, the business you do, if it amounts to less than 100 million, or all the assets, whether it's land, whether it's shops and everything that you own, if it is valued and it is valued at less than 250 million, then you are exempted from paying any tax, whether it's company income tax or capital gain tax. Do you get? So you are exempted from paying all those tax as a company. So that's where the shield for small companies, that like he has been saying in most of his talk, that's where the shield is for small businesses. So personal income tax. So your personal income tax, if you are earning salary, or if you are earning from any form of income, not as a company but as an individual or as a business name. So if you have a business name registered, or you are working as a salary, you are earning income from a company, any form of income, they are now saying that for that one, more progressive personal income bands, income less than or equal to 800,000 per year, are now tax exempt. Top marginal rates increase to 25% for high earners. So I guess what that means is that above 800,000, you are taxed 25% of your income. So if you're a salary earner, if you're an income earner, you are now going to be taxed at 25%. They said the first 100, so if you earn like 800,000 per annum, you will not be taxed. That's what they are saying. If you earn 800,000 per annum, 800,000 and less per annum will not be taxed. But 800,000 is quite small, because even if you are earning minimum wage of 70,000, it will be 840,000 as per annum, which means even people earning minimum wage, which I feel like they should update this part to at least be minimum wage. Do you get? It doesn't make sense for you to, do you get? Because it's almost like not exempting it, because normally legally no company is allowed to pay anybody less than minimum wage. It is not fair. It is ethically wrong. Legally, I think it's even wrong. It's just that we cannot implement it. Some of these things in Nigeria, but nobody should be paying you less than 70,000 in a month, because that's the minimum wage as declared by the by the federal government. So even people earning the minimum, they will still be taxed, which is why I feel that, I don't know. I know I heard the Taiwo Oyedele saying something about your first 800,000 will not be taxed. It's the balance that will be taxed. I don't know how he wants to do that. But this article I'm reading says that if your income is less than or equal to 800, but that was not what he interpreted when I listened to him. I think he was saying the first 800,000 will not be taxed. Then the balance will be taxed. Do you get? So I don't know how they are going to apply it. But basically, so that's why if you are doing business in business name, it's advisable that you change it to a company, register it as a company, whether it's a private company or not, register it as a company. And in Nigeria, you are allowed to register a limited liability company, even if you are the only shareholder. You don't have to be more than one shareholder to register a company. So you can be the only shareholder and still register a company. Okay, so like I was saying about personal income tax, so you have to, as a business name, if you only had business name, you now have to make an effort to register a company. Because a business name, from what I read, will be taxed not as a company, but like personal income tax. So it means if you are earning or your business is making more than 800,000, do you get? Then you will be taxed, and you will be taxed at 25%. You get? So after you've removed your revenue x your costs, they will not tax it. And it's very important that you consider, especially a lot of people that are doing like online businesses, that their costs are very much reduced. It might make sense for you to really register a company, because if it is something like manufacturing where the cost is much, by the time you remove costs, what they are going to tax is going to be net. But if you are now in a company, most of our companies that are doing like skit makers, or you're doing like, some people are doing a lot of businesses that even from their house, like people like us, you get? So because of that, your cost is very small. So imagine if they are going to tax you as personal income tax, it's going to be massive. You would want to quit, because by the time you remove your small costs, bulk of the money will be taxed, and then it will reduce your total earnings. So that you've been having since, you see significant. So if you don't want that, just go and register a business. Register a company, not as a company name, but register a company. So register your company legally, whether it's a private, it's not, like we said, in Nigeria, you can register a private limited liability company as only one person, as only one shareholder. It doesn't have to be more than one shareholder. And these things are not that expensive. I think you can even do it yourself compared to the amount that you would pay. So compared to the amount that you pay as tax, some of all these things are not, and you see the difference between 800 naira and 100 million naira. That difference is mad. So you might want to consider it. So above 100 million naira, yes, they will begin to tax you. But if you're less than 100 million naira, which I think a lot of the people they are trying to protect fall under, so that's more MSME. Micro, small, and medium scale enterprises. Those companies would have time to strive and then make something of their businesses before they are taxed. Okay, so there's another very interesting one. I think these guys are out to like. This one is interesting. I had to laugh. It said large companies, that's 5 billion naira plus turnover, with 750 million euros plus global revenue, must pay a minimum of 15% minimum effective tax rate. Top up tax applies if effective tax rate is lower. You know what they are not saying? Like if you're a big company, so they are now talking a large business as companies that have 5 billion naira plus turnover. Turnover is not your profit though. I think this is like revenue. Yes, and they are not even saying if your global revenue is up to 750 million plus euros. I think, Abby, this is euros. or pounds. I don't know. Those two things used to confuse me. Must pay a minimum of 15%. So if they tax your money, remember that what they are taxing is after you remove your costs. Your revenue x your costs is what they are taxing. So your profits x your costs is what they are taxing. So they are now saying that if that tax, when they tax it, is less than 50% of your total turnover, they are going to the excess. So your tax must be at least 15% of your total turnover. You know why this is? This now means that as a business, you have to be very effective in cutting costs. If you are not effective in cutting costs, you might see that you are doing Father Christmas for the business, because you are doing Father Christmas. You are running a charity organization, NGO, because what they are telling you that if you spend most of your money doing costs and then they now tax it, and maybe you make like this is 250, maybe 50 billion, maybe you make like 100 billion, and out of that 100 billion that entered into your account, let's say like 80 billion. No, let's say like 90 billion was used as cost for processing, and then your Kenny is 10 billion. When they tax that 10 billion, now 10, 15, and how many percent are it? 25% of 10 billion is, okay, it's not even 15% of 10 billion. It's not, they will not even tax the 10 billion. 15% of your 100 million is what? That's 15 billion. So they are not saying your tax must be 15 billion. If it's not up to 15 billion, they are going to help you and make it. That means, so if you are not cost effective, they are going to still collect their money. It's not their fault that you are not cost effective. That's what they are saying. So you have to be very, very cost conscious and understand what they are saying. Please feel free to correct me if I'm wrong, but that's my interpretation of what they are saying, because it said effective tax rate, minimum effective tax rate for large organizations is 15%. So they are telling you that the minimum tax they would take, and I think this must pay minimum effective tax rate. Top-up tax applies if paid effective tax rate is lower. So if the tax that you are paying is lower than 15% of your turnover, they are going to actually make it up to that 15% and take it. Meaning that, there's a way people edge all this and they're trying to cut people that are trying to avoid tax, because there are a lot of costs that you can now put under your this thing and cover it, and then say it's it's your cost. So by the time you net your cost, what will be left for them to tax will be small. You'd have been, everybody has their different ways. The companies have their different ways, but now they are saying whatever you want to do, but at the end of the day, the tax you must pay must be at least 15% of your total earnings. You get your total earnings for the year, revenue, not even total revenue. No, it must be 15% of your total revenue. And that is really, really going to be right for people that, So whether your costs, if your costs go and eat into that 15%, that's your own. You're the one that will carry your drama yourself. That's what they're saying. Like 15% must come to us. Obviously, so it is now on every business person now to be cost effective. Because if you are not cost effective, you might end up not seeing any profits. By the time you pay tax, you might end up not seeing any profits. So you need to be more cost effective. One thing you need to know is that for public companies, shareholders are not going to collect less than what they've been collecting. For me, I'm just talking like a shareholder of a company. You are not going to tell me my earnings are going to reduce because of new tax laws. Do you get? And so because of that, I expect that if your tax percent was not up to 15% before now, you begin to look at how to draw down your costs, so that at least whatever that costs that you are incurring, is better you are giving it to the government as the 15% than it's being removed from your profits. Do you get? The shareholders benefit or shareholders returns. Do you get? So everybody would have to be cost effective Do you get? So and it's only fair because as an employee, as an income earner, they already told you that PIT, personal income tax, will be 25%. So if personal income tax is 25% and then companies are being taxed at 15%, you can see that. You get? If me as a salary earner, I'm paying 25%, and then capital gain tax, I think is like 30%. You know, me as a trader, I'm paying 30%. You as a business, you cannot come and now say there is any very big money. You cannot come and say you want to pay less than 15% of tax. Do you get that? So it's something that's looking at everybody and everybody's collecting. Do you get? It's distributing the tax to everybody. So basically, you just have to be cost effective as a business. If you are not cost effective, you are going to really see. You get? Yeah, you have to be cost effective as a business. If you have been using business name, it's time to register your business as a company, so that at least if you are not earning up to 100 million, you will enjoy the free tax. I think now everybody pays tax, so this is a way for you not to even pay tax. So it's an advantage for small businesses, which is why the guy is always saying that it's an advantage for small businesses. We are trying to help small businesses, go. It's something that would grow MSMEs. Do you get? It's not, it will grow as MSMEs. So allow them breathe until they have structures that are well enough for them to now become taxable entities. Okay, so there's another one I like here. Taxation of lottery and gambling trade or business. Sorry, I'm not a hater, but almost every street, while I was in the mainland, almost every street I enter, you will see lots bets. Even if you are driving on 3rd Mainland Bridge, you will see a lot of betting companies adverts. So it has become legalized. So I think it's only fair that we start taxing it. You get? Like if we have made it legalized, that to a point where these betting companies are actually sponsoring like very hit programs on telly. So they have become very big companies. So it's time to start taxing them. NTA provided for a broad taxation of profits of gaming companies. According to the act, gaming including gambling, wagering, video poker, roulette, craps, bingo, slots or gaming machine, drawings or other games of chance conducted by any person. So people that are doing Baba Ijebu, people that are doing gaming, Bet Nigeria and all this stuff, I guess you will now begin to be taxed. Whether it's a company, okay, it says, let me see, gaming companies. Gaming includes, so the companies will now be taxed. Whether the companies will want to put part of the tax on your returns, I don't know. But they will be taxed, and it's only fair because those companies are now very big and very strategic in Nigeria. So it's only fair that they are running as a company. The government has almost legalized it and has put structure around them. So you guys are companies, so come and pay your tax. You get? I'm sorry, I'm not hating or beefing. You get? Like no unethical or no ethical bias here. It's just fair is fair. You get? If everybody's paying tax, you have to pay tax if you are in the country. Okay, so the next is capital gain tax overall. Capital gain tax rate for companies increased from 10% to 30%, aligning it with corporate rate tax. Indirect offshore shares transfer are now taxable. So capital gain tax is the capital from your capital. If you invest your capital, the gain you get from your capital gain tax. So they tax that gain or that profit. So people that do stock markets, but remember that if you're a business and part of your services is to trade, remember you are registered as a company. So if that's trading and all your capital in that trading, if it's not up to 100 million naira, you would still not be taxed because that is a business you are doing under your company. So if the net worth of your business is not up to 100 million, then I don't think you should be taxed because you are a company, even if one of your services is trading, which you get capital. But if you are now trading as a person, You get, not a company. You have no registered company, or you are trading with a business name. You have no registered company under you. You get. So if I don't think it will just be by your company account. You can use your company account for simplicity, but even if you are using your personal account or registered under your company, you get, say this is my company account, even if it is my name. Do you get? So long as, the only thing why people say differentiate it is because in your personal accounts, both private and personal money will come in. So at the end of the day, if they are looking, how do you differentiate? So if you use your company, your personal account now, and the money nets more than 100 million, you are now putting yourself liable. But if you use a separate company account that only businesses go into it, then everybody can actually see that, okay, we did not get up to 100 million. You can just tender that company accounts and they can look at it and say that, okay, they didn't get up to 100 million. Makes for simplicity for the taxing. You get up to 100 million. So because of that, we would not tax it, even if it's trading, even if it's capital gain. So if you are trading and you do not have a company, or you are using business name, basically they are telling you it's trying to become an established company. Do you get? Register with the CAC, not as business name, because business name will be taxed as personal income, but as a company, whether a limited liability company or not, as a company. Another one is the VAT. So I think they propose like a 10% value added tax, but you cannot come and kill Nigerians because you want to tax. So I think that was rejected. So because I think this value added tax was increased from 5 to 7.5. I think that was less than 5 years ago that was done. So you cannot just wake up and want to come and use. I think 7.5% on value added tax is okay, because these taxes apply to, then it used to apply to food. You know, you go to supermarket and you just see them ads, you know, all those things. But now they are saying there are some exempted products. So some products are exempted from value added tax. I think you pay value added tax on manufactured goods and services in the country, if I can still remember, where you add value to refined products or do services in the country, you pay value added tax for it. So, but they are not exempting sectors like food, books, and medicals. So those will not pay value added tax. Okay, so you would not pay value added tax for food. So if you are buying food and you are going to a supermarket and they are telling you on your bill that you're paying value added tax from January or whenever they enact this law, tell them that you're not supposed to pay value added tax from food, that food is exempted. You know, books are also exempted, medicals are also exempted. So it remains 7.5%, but with exemptions to food, books, and medicals, you know, basic necessities. So yeah. Impute VAT on services and capex now fully claimable. Okay, I don't know what that means actually, but I think it's a way to get back your tax, you know, some part of your tax. So basically, value added tax remains 7.5, and with exemptions of food, books, and medicals. You know, they are not going to be taxed at all. Zero tax on those ones. Zero weighted goods tax, that's what they call it. Okay, so I was talking about the reclaiming of some of your tax. So you said businesses can now claim imputes value added tax on both services and capital assets, like fixed asset purchases. A major change from the previous law that only allowed recovery for goods or material used for production purposes or resale. So I guess imputes, even your imputes, you can now get a tax rebate on it. You get, so that's what they're saying. You know, the mandatory invoicing and physicalization. All VAT registered business are now required to adopt FIRS sanction invoicing system. This platform allows for real-time taxation reporting, significantly improving VAT value-added tax, transparency, and reducing. So for them, for the ease of getting this tax, they need your invoicing to be soft copy or electronic, so that they can easily analyze it and then collect their money. That's for companies anyway. But remember, we are also telling people that come and do your registered company, because if you are not registered as a company, after 800,000 you will be taxed. But if you are registered as a company, there are some obligations which are not so difficult, because now there are a lot of online apps that you can actually use to do most of this invoicing. I had to do one for somebody and it was really very easy. You get, so it's not really a big deal. It's just the discipline. Most of the things they're asking for is just the structure. They want even small businesses to put structure on all these things, which is not bad, because it's structure on a company enables or leave rooms for continuity, whether the owner of the company dies or not. You get, it leaves rooms, and then it helps you as a small business access fund from investors. Because most times when people want to invest, they'll be like, okay, bring your books. And a lot of times small businesses don't have books. We don't track anything. And it's very risky for somebody to enter your business. Even if you're actually making profit, you can't confidently say you are making profit because you have not even analyzed your books. You get, so you need to analyze your books before you can now say you're making profits. So this will force most of us to put structures like that, and then also help the business scale properly. Okay, so they said all registered business must adopt e-invoicing and real-time value-added system aligned with FIRS technology protocol. So as a business, you will now be doing e-invoicing. That would help. So use computers or use electronic means to get your invoicing, so that when they are asking, you can easily just send them a soft copy and then they can see it. Some companies don't even do statements. It's something you might want to do. The good thing about all these documentations, it helps you first as a business owner before it even helps the client or the government, because it helps you know if you're making profits. It helps you know if you're making loss. If you have your balance sheet, a lot of people run businesses, but they don't do that. But it helps you know if you are making profit. It helps you know if you are making loss, so that you can know where you are overspending and you can cut costs. And a lot of people, when you see people doing budgeting and calculator and doing balance sheets, they always feel that people are, what are you calculating so hard? But as a business owner, you need those things, because you need to know. If you are not seeing those things at least monthly and everything, you will not be able to know the month you made loss. You will not be able to know the months you make profit. In the US stock market now, Trump is saying that the people should stop reporting quarterly. Now, even if he says that a reasonable company would want to report earnings, just balancing of their earnings or reconciliation of their earnings, they do it monthly, because you need to know. Not necessarily for the public to know, but you yourself, it is first to you, so that you know when you are seeing profits, when you need to cut costs. Where your lapses are, where you lose money, where you earn money, which products are selling more, which products. So those things, having those figures in front of you gives you and helps you now know what decisions you need to make to actually improve your systems or your company. So it's telling you now be doing e-invoicing. If people buy things from you, you have to give them invoicing, electronic invoice. I don't know how this will apply to small businesses, but hey, let's see how that goes, I guess. Okay, so I think this one is more for big business. Companies operating in free zones. I think there's a free trade zone. Those areas in Lekki that are free trade zones. He said companies operating in free zones or exports processing zones remain exempt on exports, but now face tighter scrutiny when supplying Nigerian customs territory. Conditions for maintaining exemption status are now stricter and clearly defined. So you cannot now say you are operating in a free trade zone and then you now come to a non-free trade zone to do export, and then you now want to claim you have free trade zone. The free trade zone business applies to the free trade zone area. I think that's what they are saying here. So basically, you now have to be looking at that. We play a lot of smarts. So the tax collectors are also the tax master. Taiwo Yedele is also now being very, we are Nigerians, so we know ourselves. So the man too is now also being very smart. So let's see how we can collect the money. So that is that. Okay, so there's another one now. Clarified residency rules for individuals. So said the Act introduced a clear definition of tax residency. That means who is staying in Nigeria and who is not staying in Nigeria. An individual is considered resident if they spend 183 days or more in Nigeria. So even if you are going abroad, if you are spending, so it's not saying if you are spending more than 183 days or more in Nigeria, you are a resident of Nigeria. So because of that, you are open to personal income tax. You have to pay personal income tax. 183 is like 6 months, I think. 90 is 3 days. Yeah, 183 divided by 30. Yeah, 3 divided by 30. 18, that's 6. So it's like 6 months. So if you stay roughly like 6 months in Nigeria, you are a resident of Nigeria, and so you should pay personal income tax wherever you're working, especially so you have to pay personal income tax if you are staying up to 6 months in Nigeria. You're a resident and you will be taxed, so you'll be paying personal income tax. So it said PIT, personal income tax, now applies to worldwide income of Nigerian residents, defined to include those with economic and family ties during the year. So if you are spending up to 183 days, and it's not saying it applies to your global earnings. So if you are not paying your earnings across, whether in Nigeria or not in Nigeria, so long as you are spending up to 183 days in this country, the country wants to collect tax from you. Because if you are spending, fair is fair though, if you are spending up to 6 months in a country, come on, 6 months is half of the year. If you spend up to half of the year in the country, it's fair for the country to say you are residents of that country and you should pay tax. But the clause here is that the tax is not just on your Nigerian services. The clause is also on your non-Nigerian services or non-Nigerian business. Your global business is what is being taxed. So you might want to sit down and look at that and start re-strategizing how you live your life. So a lot of people will have to sit down, read this law, and know what they want to do. Because if you are earning globally and Nigeria wants to tax your pounds and dollars, you might want to sit down and look at what you want to do about that. Which is, again, register your company as a business, so that 100 million will be the cap that they are looking at. Okay, so conclude. In terms of resolving tax issue, there is now a tax on board office where tax matters will be resolved, and there is tax appeal tribunal where your tax issues can be resolved. So it's not only election tribunal. We now have tax appeal tribunals where you can go and resolve your tax matters. I think tax matter is a show on channels. So resolve your tax matters, and then you might actually win and get your money back. We're in a good world where a lot of things are happening. I think I saw a news that Amazon Prime is refunding Prime money to some people that took them to courts and they won. So I say Amazon, yes, now it's Amazon Prime. It's Amazon is refunding. So it's a very beautiful world we live in right now. So you can take your government to court. Your government can take you. You can also tax your life out. It's a weird country, but it's a beautiful one. It's a beautiful world to live in. So I hope that you learned 1 or 2 things.